Hey everyone, my name's Andy. My channel is Finding Value. If you like this content, please subscribe, click the thumbs up button, and if you're really cool, leave a bunch of comments. So this one is nickel shortage, and I'm going to give you some recommendations here. So let's jump into nickel. Let's see what we can figure out about nickel. So nickel shortage by Finding Value. Could nickel limit EV production? Electric vehicles, that is. Everyone's looking at lithium being the next shortage. But nickel is in short supply across the world. Hundreds of tons of earth to produce 1 ton of ore of nickel. This Sarah from Tesla's global supply manager for battery metals told a closed-door Washington conference of miners, regulators, and lawmakers that the automaker sees a shortage of key EV minerals coming in the near future, according to the sources. And one of these key minerals is nickel. Nickel shortages. Nickel's worldwide production had been relatively flat for the past several years despite a steady increase in demand. Just in the first half of 2019 alone, nickel prices rose by more than a third, with prices expected to increase even more. Tesla will continue to focus more on nickel, part of a plan by Chief Executive Elon Musk to use less cobalt in battery cathodes. The Sumitomo Metal Mining Company of Japan recently told journalists that they are facing a deficit in production of almost 51,000 tons for the 2019 calendar year. Now let's look out there in future demand. Industry analysts expect the worldwide demand for Class 1 nickel, the highest purity grade, to increase by a factor of almost 16 times the demand we are seeing today in 2019. Nickel is used in a lot of different manufacturing processes. Some analysts are predicting that unless nickel production increases significantly within the next 10 years, demand will greatly outpace production sometime by 2035. So we're looking at the long game here, guys. Here is the industry. They're losing money at $10,000 per ton. This is a year old. So we've got the line here, price line, and this is the cost of the producers. So this is one giving us validation that commodities are just absolutely insanely cheap. They're below the cost of the high cost miners, super low entry points. And we know that these things are going to absolutely explode in price when nickel goes higher. Here is the inventory overhang worked off by 2023. New supplies definitely needed. We're coming up on that. What you want to do is, the markets are always forward looking. They're going to start pricing this stuff in now, a year or two before. We got to get our shares, we got to find our companies, and we got to start getting investments in nickel producers and miners. Here is the companies that produce nickel in production in 1,000 metric tons. Look at the two up here, Vale and Norilsk Nickel, two that I've been recommending. We've got BHP Billiton, that's another really good one down here. Those are the ones that I like. Next, Vale. Vale achieves the vast majority of their revenue, 74%, from ferrous metals, mostly iron ore. Base metals, mostly copper and nickel, bring in just 20.2%, meaning Vale is predominantly an iron ore producer with some nickel, copper, and coal revenues. Vale is a premium producer with 60% of its production being Class 1 nickel. That's what we want. Norilsk Nickel is a large diversified Russian miner and the global #2 nickel producer with the world's largest nickel reserves. They are also the #1 nickel low-cost producer with the largest nickel sulfide deposit in the world. Gotta get in it. Here's the sales breakdown by metals. Palladium's the largest contributor to revenue. There's palladium, nickel, copper, platinum, and other. I like all of those materials. Norilsk is a top-tier nickel stock due to their #2 global nickel producer status, industry low costs of production, and industry-leading nickel sulfide reserves. At 27% of revenue, investors will also need to be neutral or positive on palladium and copper, which I am positive on both of those. I like copper quite a bit. BHP Group. The main drivers of BHP revenue are iron ore, copper, coal, and petroleum. Noting BHP recently sold off their U.S. shale assets to BP. BHP has plans to expand nickel sulfate production to meet future battery demand, with Stage 1 at Nickel West targeting expansion to 100,000 TPA nickel sulfate and Stage 2 to follow. They also plan to produce some cobalt sulfate. So the conclusion here is nickel demand is coming and supply is not there. We need to look into investments to capitalize on this opportunity. Nickel inventory is declining. We want to focus on class 1 nickel, which is high purity. My take is NILSY, VALE, and BHP are some diversified, large miners that have the reserves that can produce, and they're paying pretty good dividends. I would add them into my portfolio and probably forget about them, because over the long term, these things are going to return very well. I like dividends. I like getting paid. So this is Finding Value. I appreciate your guys' time. And click subscribe, thumbs up, and all that good stuff. Thank you.